Welcome back, everybody. We have a special new guest for this particular segment, Jason Appel with Elliott Wave Trader. Jason, thanks for being with us.
Very welcome. Good to be here.
So, since you're new to the show, maybe talk a little bit about your background, what got you here, and why Elliott Wave.
Excellent. Well, I have a long history, I guess, with futures trading. I started working on the trading floor at the Chicago Board of Trade out of high school. Actually, I was an 18-year-old kid on the floor, and I worked in a variety of different pits and eventually got hired for a group to trade electronically in the early 2000s, and have sort of stuck with it for all these various years, and got into Elliott Wave trading as a technical discipline, more specifically, little over 10 years ago. And it's really transformed the way that I look at markets, in terms of how to view price action and how I see trading opportunities, risk management, et cetera.
So, did you have a favorite market that you enjoyed?
Oh boy, I would say I'm probably most active with the metals and with the stock indexes. These days, I do a fair amount in the Euro stocks. Actually, I do a lot in the physical commodities. I do a lot of crypto as well, specifically at Elliott Wave Trader. I provide Elliott Wave analysis on a lot of the agricultural commodities and cryptocurrencies, Bitcoin, a lot of the crypto stocks as well.
So, your role at Elliott Wave Trader is kind of twofold, right? You're an educator, you provide content, but you're also looking at markets, analyzing markets.
Exactly. I provide, yeah, a few different services there. Again, yeah, we do the I specifically am focused on providing analysis in the cryptocurrencies and the metals and agricultural commodities. And then I do several educational webinars throughout the month. We typically have about 3 going per week, where we focus on the application of Elliott Wave towards trading decisions, and we look at different trade setups and how to manage them.
So Elliott Wave is a very structured way of looking at the market, but it's also flexible. So a lot of the viewers here may not really have that foundational background in Elliott Wave. So why don't you take a few minutes and just kind of talk about the idea of Elliott Wave and how Elliott Wave got to where it is today?
Great. So Elliott Wave it's a form of technical analysis. Okay, so we're not really interested in news narratives or fundamental analysis in particular. Really, just focusing on price action that goes that we can see, whether it be a line chart or a candlestick chart, et cetera. And you can use it with a couple other technical studies in tandem. We have a few people at Elliott Wave Trader who have great expertise at integrating what they do in terms of looking at the patterns in price, along with some of the technical oscillators, in particular, MACD, the moving average, convergence, divergence. I'm primarily focused just on the patterns that I'm seeing in price. And I don't necessarily look at it as that, Elliott Wave is going to be applicable to all situations. We still want to be judicious in terms of how we look at a chart, let's say, that's neatly fitting into our expectations around the pattern. But essentially, the theory here is that markets will tend to form their trending movements subdivided into 5-wave structured formations. And when we see these type of patterns emerge, we would identify in that circumstance a good, confident roadmap for how price is going to go out into the future based on what's happened already, supposing that we're seeing the right type of setup. And so I can give a couple examples of that.
Yeah, let's take a look at your charts.
Great. Okay. So can you see my chart here? I have a 1-hour candle silver chart posted here.
Yeah, we do. We see your chart.
Great. Okay. So the theory here, you can see, for example, we have an uptrend from the August lows in silver, and I'm labeling this here with the assumption that this formation here will take a 5-wave move. So you can see my major waves of this are at this degree. We can call this circle 1, circle 2, circle 3, circle 4, and circle 5. Okay, and how do we know to be looking for something like this? We typically are going to want to ground this into a larger degree to understand that we're in an uptrend, well, this trend being an uptrend at multiple time frames. So you can see here, for example.
This is the daily chart now.
Yeah, now we're on the daily chart, and now I'm going back here to the 2022 low. And so what starts off these charts are what's called, let's say we're looking for an uptrend. We would be looking for a completed corrective pattern. So we label that as an A, B, and C. That is going to be a 3-wave move that is counter trend, okay? And at the completion of that, before we're taking any action, we are waiting for a 5-wave structure. So after we see this A, B, and C into that 2022 low, you can see from that low, we formed a 5-wave uptrending structure into this May 2023 high. And once again, then we got a corrective pullback that we can see from that low. I'm going to label that here so we can see what that looks like into this low. And at that point, we have good expectation of upside follow through to various Fibonacci extension regions. So again, our establishing of the trade is that we get this corrective move that is potentially complete. We don't have good evidence of completion until we see a resumption of the larger uptrend with 5 waves, and then we see another corrective 3-wave pullback. At the completion of this pullback is where we're starting to look for longs. And one of the things we may do to look for longs is to measure out a retracement zone here that I can show here. We're typically looking for a long on a wave 2 inside of this 0.618 to 0.382 retracement zone. In this case, we came really nearly all the way down to the 618 zone. This would be an area where we would look to accumulate longs, and this idea for trading much higher here up to the 1.0 extension and then the 1.382 extension is valid so long as we are above the start of that initial 5-wave move that we saw after our 3-wave correction that kicked the whole thing off. And so what we're looking for then is all of our uptrending structures to take shape as 5-wave moves. Some of them are going to be clearer than others. This is not really a very attractive wave 1. We don't have a clear 5-wave sub-wave pattern inside of the wave 1. But when we look at the wave 3, for example, we have a clearer 5-wave sub-wave pattern that I could draw in. And then I can drill into how we would use this at a smaller time frame, same type of pattern that we're working with here at the larger degree. But I'll zoom in here from this May high to talk about application of this at the smaller time scale. So we'll go back to this 1-hour chart that we were looking at the beginning. And you can see from this May high, once again, we are looking for the bigger 5-wave structure up here. That would be that regular 5 that we're looking to reach at least the 3688 region. Well, what do we have off of the May high? We have a 3-wave decline with a particular subwave structure as well that might be a little bit beyond the scope of beginner's education that we're looking for here, but this is something that we would provide much more in-depth analysis on in Elliott Wave, at Elliott Wave Trader, in terms of how we look at defining these subwave structures of the corrective patterns. But in any case, what do we see here? We have a 3-wave ABC pattern into this August low, and then we have a really clear 5-wave subwave move into the August high. We get our pullback into the support zone here, and this is a zone where you'd be looking to enter longs to play for a substantial upside here. And then we can even apply this then at another smaller degree off of the September high. We once again have a 3-wave corrective pattern into the October low. We get that 5-wave move for the wave 1. We get the wave 2 pullback, and we get this big extension to the upside. And this was trades that were talked about in real time in the Elliott Wave trading room, in our virtual trading room. And so the story here is where we identify the biggest moves in the market are always going to, not always, sometimes they'll be in the fifth wave, but I want to say the majority of the time we're positioning in advance of this big third wave. Within the 5-wave structure, the third wave is where we tend to see the big breakout overall. And so we want to position inside of the wave 2. So we wait for the wave 1 to complete. And once the wave 2 is pulling back into our ideal retracement region, that's where we accumulate longs to play for the wave 3 of various degrees. And so essentially what this allows us to do is to frame out really excellent risk to reward trades where you're taking relatively small risk. Here I can show with our risk to reward type of tool here for major upside. So for example, just to work with a couple of specifics, if we measure out this wave 1 here, and we'll take some of these other lines off the chart. It's getting a little bit busy there. Okay, so if we measure out this wave 1, we can see here that our support zone is in this region. Yeah, certainly. Okay, so we'd be looking to get long inside of this region here overall. And then we would be looking for an extension, what we typically identify as a standard extension for our third wave is going to be up into this 1.618 extension zone. And you can see inside of this, even without, needing to bottom tick this, but instead just trying to get along somewhere in the middle of this retracement zone. And even if you're waiting all the way till the bottom of invalidation here, you're getting something like a 3.6 to 1 risk to reward ratio here, which is really outstanding. And we have a roadmap along the way of how we want to see price develop in terms of pattern that would allow us to intelligently move up our stops along the way so that we can continue to preserve a good risk to reward ratio as we move through the trade, and not to just leave those targets and those stop points at static intervals.
So that's a great tool. I love that risk reward tool. Very clear, visualizes the idea, shows you the numbers. That's really a powerful tool.
Indeed. I really love to work with this just to get a sense. I mean, I've been doing Elliott Wave long enough at this point that I understand when I'm entering in on a wave 2 that I'm going to be dealing with these types of risk to reward skews, oftentimes in excess of this, depending on how the smaller time frame is fitting into the larger time frame. Oftentimes we might be expecting a more substantial extension than what we would just see off of a 1-2 of a particular degree in terms of how we see the smaller time frame fitting into the larger time frame roadmap.
That's interesting. So just to be clear, you have a broader, in fact, there's a couple of different levels here, right? You've got a broader structure for Elliott Wave. Then you have Elliott Wave structures inside of that structure.
Exactly.
So just to be clear, there's multiple Elliott Wave patterns here on the chart, and each of them work together to develop the overall strategy.
Yeah, there's a great word that is used to describe this. Elliott Wave is called a fractal form of analysis. And so what this means is that the patterns that we see at large and small degrees are all self-similar, meaning that, for example, if we're talking about this, let me just mark this out here. If we're talking about this wave 5 that we're looking for off of the August low, we're not terribly concerned with the timing on this. This is primarily a tool for price analysis, but we're looking for a 5-wave structure for this wave 5. And then inside of the moves that are moving price, that are advancing price in the direction of our trend, we're again looking for 5-wave subwave structure. So again, inside of our wave 1, we see this 5-wave Elliott wave pattern, the corrective pattern for the wave 2. We see 5 waves inside of the wave 3. We get corrective patterns inside of the waves 2 and the waves 4. And so this allows us a dynamic contextual roadmap where we can look at any activity and talk about where are we within the trend contextually at large and small degrees. And so this is not necessarily distinct from trend analysis, but this gives us a huge advantage over just doing trend line analysis. It allows us to say, where are we within this trend? How much additional upside are we expecting? And this allows us to say when we're getting near a completion, hey, this is really an area where we need to be trailing our stops a little bit more tightly. It doesn't mean that price can't continue to extend in the direction of our trend. We don't want to be fighting the trend, but we do get an idea, for example, when we're getting up to the 1.618 here, that this is around a region where we can reasonably be expecting a reversal. And so it doesn't necessarily mean that we have to take profits right at this level, but when you can see we have 1, 2, and 3 and 4 waves within this 5th wave, and we're reaching the 1.618, at that point, I would want to trail shorter term stops to just below this 4th wave here. Is particularly when we're talking about futures trading. Silver is a highly leveraged contract. If you're talking about entering here on this wave 2, for example, at 3150 or so, and now you're getting out at 3465, I mean, you're talking about, I don't know, that's about $15,000 per contract there. And so you don't want to be taking huge drawdowns. So at that point, we're looking to take some profits and then trail stops up to this zone. And you can see we would get taken out here, though we do get a bounce back higher. It's an indication that we are starting some larger degree pullback. And at this point now, we're looking for a completion in this wave 4. And again, we'll look for that process to start again, where we get an initial 5 waves up for this wave 1 of 5. And then we'll look to trade that wave 5 to the upside here.
And that makes sense. This is a market where you really want to be trading the micro anyway. I think it's fine to do the analysis here, but most traders, new traders starting out, would not want to trade this big contract.
Probably not. Yeah, if you're a newer trader, you're trading on a smaller account. I think there are mini silvers that are 1/5 the size offered at the CME, but
Correct. That symbol is SIL. It's exactly it's 1,000 ounces instead of 5,000. That's exactly right.
Got that. Yeah.
So I have a quick question here. I love the Fibonacci kind of integration here. Was that an original Elliott Wave thing, or is that something that you guys have integrated?
This is something that's part of Avi Gilbert's work. So I'll just go back to my background a little bit. I started as a member, as a subscriber to ElliottWaveTrader.net back in, I think it was 2013 that I started watching these market calls that really had nothing to do with what the fundamental narrative was, and got really interested in learning Avi's methodology. And so this is sort of Avi's contribution to Elliott Wave, which is that we wait for the waves 1 and 2 to shape up, and that gives us what he calls Fibonacci Pinball, where we see price bounce back and forth between these key Fibonacci levels. And we can do this rather accurately once we have the initial wave 1, 2 of our setup. So, we patiently wait for the wave 1 and 2 to complete, but then we get a really pretty good dynamic roadmap that's very tradable for waves 3, 4, and 5. And these typical standard Fibonacci zones that we're talking about, for example, the 1.0 to 1.236 extension for the wave 3 of 3, the 1.382 up to 1.618 extension for all of wave 3. These are really repeating patterns that Avi has identified. And, they're by no means exhaustive of all market activity, particularly in a strong trend. And we know that the 3rd wave is the strongest part of the trend. We do see instances where price massively exceeds these zones. But this really gives us a great idea of where we want to look to take profits, manage risk, trail stops, etc. And it tends to be a really nice way to view markets in a trending context for having a roadmap to allow us to manage risk this way.
I love that integration. They really seem to fit together very well and really accent what's the word I'm looking for? They really help each other really kind of get the idea across. I have a quick question for you, maybe just some clarification for the audience a little bit. Can you talk about how Elliott Wave works in an uptrend versus how it works in a downtrend?
Yeah, so generally Elliott Wave is going to be agnostic as to are we in an uptrend or in a downtrend, but I can address that probably best if we look at, why don't we pull up an S&P 500 chart, and I can show some examples of downtrends within a much larger degree uptrend in the market. So I'm going to fly in here a weekly S&P chart, and we can go back to looking at particularly the 2000 to 2009 period is really interesting. So can you see a weekly S&P 500 chart on my screen?
Yes, that looks great.
Okay, so obviously we are in a very large uptrend in the S&P 500. I can go back here to 1932. We are in a very large uptrend in that time frame. I mean, we're talking nearly 100 years at this point. And within that uptrend, there have been various instances where we've had tradable downtrends. And so we want to understand still that we might establish a downtrend within some lower time frame, which can still be a quite big time frame that can be on the daily or weekly scale. But if we're looking at something, for example, on a quarterly scale, clearly we're within an uptrend, and any of the short trades inside of a downtrend are going to be at some degree that we're going to consider them counter trends. So we still want to have some greater context of the overall chart. When you're dealing with equity indexes, for example, that have been trending upwards at large time scales for 100 years, again, the primary trend is always going to be up. I think if we're looking at if we look, for example, like an IPO'd stock that comes out with a lot of hype and then forms a downtrend from its release in terms of publicly traded shares, that's going to be a different context. And there are some subtle differences in how we would apply Elliott Wave in that context. But let's take a look here. We can look at a weekly chart, and let's look at the action off of the 2000 high. So at the 2000 high, we completed our larger cycle 3 here. You can see I have with this Roman numeral 3. And what we were looking for from that Roman numeral 3 is a corrective. I'll take some of the lines off of the chart here. We're looking for a 3-wave corrective move. Remember, our moves in the direction of the trend, we're looking for 5-wave formations, and our counter trend moves are 3-wave formations. So how do we trade a counter trend formation or a short trade here, for example, inside of a larger uptrend? This is going to happen inside of the C wave of a move. And so these C waves can be very explosive in terms of really tremendous crash type of scenarios. We usually have an idea to predict where crashes are going to occur because they generally are going to occur inside of a C wave of some correction. So for example, off of the 2000 high, we had what we call an initial A wave down into the September 2001 low. Everyone remembers that climax was obviously with September 11th. We actually bounced from there into the end of the year in a B wave, and then we got a little 5-wave move down here for this wave 1, and we got a wave 2 bounce. Our C waves are often impulsive moves here. And so we see this 5-wave structure like we were talking about with silver in terms of the on-trend move. In the C wave, we're seeing an overall counter trend move, but that still has that good sub-wave structure that we can trade.
Quick question for you. Let me interrupt for just a second. Are the A and C waves always associated with a 5?
No, A waves are going to be rather tricky, and generally speaking, how we were talking about how we like to wait for the waves 1 and 2 in a very conservative or orthodox application of Elliott Wave and Fibonacci Pinball. We wait for the completion of 1, and as 2 is completing, we start to look to enter, or we even wait for the 1-2 setup within the 3rd wave to enter. With the corrective patterns, the best application of this is to wait for a completed A wave and wait for a completed B wave, and then even wait for the 1 and wave 2 of the C wave before we look for an entry. A waves are tricky because they have a variety of different subwave structures. In this example here, into 2001's low, that was a 5-wave A wave, but you can see, for example, into the 2002 low, we have a 3-wave A wave. So A waves are going to be tricky because they're variable in terms of how the subwave structure may form. And B waves are a nightmare to trade generally. We generally avoid trading within multiple degrees of B wave. They're very unpredictable market activity, and it's usually not an area where you're going to find a lot of predictive advantage. For my members, especially in the educational videos, when we're in some sort of larger degree B wave, a lot of people get antsy to trade because we haven't had a trade in a while, and they're asking, hey, what are we seeing here? And I view it as very useful information to say, well, we don't see anything that's worth looking at within this chart right now. Go look at another chart, and don't even bother with this one, because if you don't have an advantage, the worst thing you can do to your account is trading when you don't have an idea what's happening.
I totally agree.
Yeah, so I look at B waves as at this point in my career, I invite B waves to come and just say, hey, I'm waiting. I'm not doing much with this chart, and we'll wait for the opportunity to set up. Yeah. How it eventually sets up then is once we complete a B wave, we want evidence of that completion with a 5-wave move in the opposite direction. So off of the 2007 high, here's our great example of this. We got a 5-wave decline after a completed 3-wave structure for the B wave into this 2007 high. We get this corrective bounce into that. Again, we identify this typical retracement zone here into this 0.382 to 0.618, and we're shorting in here for this massive decline in this 3rd wave. And oftentimes in a C wave, we will see some enormous extensions within the wave 3, these that are going to be far beyond what we see in a lot of other structures here. So for example, this 3rd wave took us down below the 2.618 extension of the of the initial 1-2 of the structure.
Interesting. Jason, we are out of time. This went by way too fast. We'll need to have you back again to again just kind of go through all of these really amazing tools that you guys offer. Can you tell our audience how they can get in touch with you?
Yeah, let me show this on my screen here. So this is our home site here. It's ElliottWaveTrader.net. We have a variety of different services on here that cover a variety of different marketplaces. Our main focuses are going to be on the equity indexes, the metals. We look at energy charts, and we look at some of the currencies as well. So this is really applicable towards any markets where we're seeing trending type of action.
Fantastic. Thanks so much for being with us, and we'll have you on again real soon.
I appreciate it, Mike. Thanks a lot.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.